All right, guys, welcome to another live stream. Welcome to another live stream. In today's live stream, we're going to talk about inflation. Inflation numbers just came in. They came in worse than expected. So we need to talk about the implications that's going to have on the market. And then also the implications it's going to have on the Fed, decreasing interest rates. Because remember, they were trying to decrease interest rates in May or June, or at least that's what they were talking about, right? Or from what they were saying in their meetings, it looks like they were going to decrease interest rates, in May or June. But now, since we're getting these inflation reports that are not looking too good, we might not get our first interest rate cut up until September or November. So, yeah. And also that's going to affect the markets as well because this year is supposed to be, well, it's going to be, right? So at least for the crypto market, we are going to get a bull run, and we were expecting a bull run for equities as well. But I think, again, I was speaking about this in one of my previous lives, that I think the bull market for crypto is going to come first, and then we'll get a run in equities because we're going to have that. I was saying that we're going to have that imbalance where if you were investing in crypto, you could take those gains and then go to your favorite equities and make a lot of money that way. But this might also have an effect on the crypto market. But I think the crypto market has too many good catalysts coming up, specifically the Bitcoin halving that's coming up in the next 2 to 3 weeks. So that's going to be very bullish for the crypto market, where Bitcoin's supply gets cut in half. And, well, the supply that comes out to the market through mining gets cut in half. So that's going to be pretty big for the market. But interest rates, if they don't cut interest rates until September or November, it's definitely going to affect the magnitude of this crypto bull run. Because I think we had a lot of things going for the crypto bull run. We had the halving, we had the Bitcoin ETFs, the spot ETFs getting approved, and so those two things, and then also the interest rates, right? The cutting of interest rates. So those three things affect the bull market when it comes to crypto. Now, people say, like, I think crypto only gets affected by interest rates now is because the market is not as mature, like something like gold, right? Interest rates probably do affect gold in a little way, but it's nothing like how it affects smaller companies, in the stock market, right? So, or like cryptos that have like a small market cap. But yeah, if they don't end up pushing, or decreasing interest rates in May or June, most likely they'll push it out to the third quarter of 2024. And yeah, but I still think they're going to be decreasing interest rates this year. It might go. Remember, we were saying that they were going to cut it for three times this year. First, they went to 4, then they went to 3. Now, maybe, who knows? They might just do it twice this year. But yeah, we'll see. But let me share my screen. Let me share this article that I have. All right. So it says, here's the good news in a troubling inflation report. It says there's actually some good news for shoppers in the latest inflation numbers, along with the reasonable chance that the resurgence of inflation won't last. It's not dead yet. Inflation dropped sharply in 2023, but has reasserted itself in 2024 with unsettling implications for shoppers, financial markets, and President Joe Biden's re-election odds. It is also going to affect, remember, we're in an election year, and I'm not for either side, but, they do, it's in Biden's best interest to cut interest rates as soon as possible so the market could go up, and it looks good on his side, right? If he cuts interest rates while he's in office and the market starts to do better, it looks good as he's, debating Trump, right? So it says the annualized inflation rate hit 3.5% in March, up from 3.2%. Right. So it was 3.2% in February and it says, and before 3.1% in January. So it keeps going up each month. So it hit 3.5% last month, March. It says the Federal Reserve inflation target is 2% and for much of the last 12 months. So yeah, so they're trying to get to that 2% inflation number so that way they could start start to cut interest rates. But we keep going up each month, right? So in January we had 3.1, February 3.2, and now, we're up 0.3% in March, right? And now we're in April, but we'll see how those numbers come out in May. All right, so they're trying to move towards this 2% number. I don't think they're trying to hit it directly, but at least see it trending towards that 2%. So if you were like, if it was 3.2% last month, maybe if it hit like 2.9%, maybe they would have decreased interest rates going in May or June. But, it's going up. So it says, and for much of the last 12 months, it looked like as if the Fed was making steady progress toward that goal. Now maybe not. Right, and it looks like it was a big jump. Starting in 2022, the Fed raised interest rates 11 times. Its usual tactic for battling inflation by a total of 5.25% percentage points. Yeah, and that's true because remember, people were able to get loans, mortgage loans for like 2.5%, 2%. That was a good rate to get loans at. But now, I mean, in 2022 they raised it 11 times, a total for 5.25%, and now you can't. I think the minimum you could get a mortgage interest rate right now, it's like I think 5 or 5.2. Maybe you could get it for a little bit lower, I guess, if you have better credit or if you could work something out with like your local credit union. But yeah. I don't think you could get a mortgage interest rate for less than like 5%. It says the last rate hike was in July, with inflation broadly declining since then. Investors have been hoping the Fed is finishing hiking rates at the beginning of 2024, and they have, right? So they haven't been increasing interest rates. January they haven't. They kept things the same. Nothing in March or February. So at least they're not increasing interest rates. But with inflation heading towards 4%, right? Because 3.5% is pretty close to 4%. And we're trying to trend towards that 2% number. So, yeah, we'll see how it is in April. And I don't think it's going to be good for equities. I think crypto, like I said, I think crypto will still be okay because of all the positive news that's coming out in the next couple months, right? That looks increasing. Okay, so it says it says with inflation broadly declining since then, investors have been hoping the Fed has finished hiking rates at the beginning of 2024. Most analysts expect meaningful rate cuts this year, which I still think they will be cutting rates, but it's probably going to be pushed more towards the end of the year. That looks increasingly unlikely. In January, the odds of rate cuts in 2024 were 100%. According to the CME Group's FedWatch tool, those odds have now fallen to 89%, with 95% odds that rate cuts total 1% or less. That's a big disappointment to investors who were hoping for deeper rate cuts, and it explains why 5-month stock market rally stalled at the end of March. Right, and we started to see a dip in certain stocks. I think even Nvidia right now is experiencing a little dip, but the AI trend is very strong. So I think that's still going to continue as long as they continue to perform. But you saw it in stocks like Tesla, where I think they were over 200. Now I think they're at 175. They may be even lower today. But yeah, stocks like Tesla fell. I'm trying to think what else. Stocks are falling, right? You even see Reddit. Reddit was an IPO, but it came out pretty hot. But like I said, that one, usually people that invested privately sell once it goes public. And I knew that one was going to decrease. But you see it in other stocks as well. I think Facebook and Apple are down a little bit. and I think Amazon is down a little bit as well. So yeah, it's a big disappointment to investors who were hoping for a deeper rate cut, and explain why 5 month stock rally stalled at the end of March as investors began accounting for stubborn inflation. Where inflation is. All right, so let's look at this chart. It says where inflation is and isn't 12-month change in the price of auto insurance, 22.2%. Yes, auto insurance has gone up. If you guys pay for car insurance, you know that your car insurance went up. Mine was like $900 for I'm trying to think. I think every 6 months I was paying 700 bucks, right? And that increased to like 950. So every 6 months I'm paying 950 for car insurance. And it's like, so it's some of the basic car insurance. Like I'm not well, it's fully covered. I shouldn't say it's not like partially covered, but I have full coverage, but like basic full coverage. It's not like I went all out. So yeah, and that's one industry where they're allowed to charge you more than what they need to charge you. Like auto insurance companies work together. Like even when I called and I asked why my rate was going up, they just said, we can't control it. And I was like, what do you mean you can't control? Like it's your company, you control the prices. They can control the price. The thing is, they all work together. So if they're charging you a high price and you could get it lower at another auto insurance company, that company is losing out. And they can do that back and forth with each other. So they just said, let's not do that. Let's not get into a price war where you're putting your cost of your insurance lower and I'm putting my cost of insurance higher. Let's come to an agreement where we can, since inflation's going up, we can make people pay more by just coming to like an equilibrium price and saying, okay, for this type of car insurance, we're going to charge $900 every 6 months. We'll all charge that, so somebody can't leave and charge you more. Now, I actually do like it. You do get perks with staying with your car insurance that you've had for years, because I tried to move to another one and it was actually way more than $950. I think it was like they were trying to charge me $1,100 or $1,200. So I think they do that too, where they might tell the competitors, hey, this is the standard price, but if you get somebody new, you can charge them over. So you basically get penalized for leaving the car insurance company that you had, but then you also get penalized on the other end when you look for a new auto insurance company. So yeah, I think they're definitely working together. So the 22.2% is accurate, because mine went up $250. So that divided by 700 is around 20 to 30%. Okay, and then it says rent up 5.7%. I've been lucky with rent, and then housing is right below that. So housing is 4.7%. My rent did go up, and that seems about correct, because I was paying $2,100, and I think when I renewed my lease, I was paying $2,200 or $2,300. So yeah, that seems about correct. Restaurant, meals, personal care, earnings, that's all around 4%. Along with transportation, overall inflation 3.5%, and that outlier, the auto insurance, probably making that number a little bit higher than what it should be. And then everything else, right? If you look at the list, it's just new vehicles, clothing, gasoline, groceries. Everything has gone up. So now look what's gone down. Look at what, like, the percentages or the category of things that gone up. Now, if you go to the bottom, you could see things that have gone down, right? So negative for new vehicles, 0.1%. For electronics, 0.8%. Hotel rooms, 1.9%. Now, the reason why you see it for these things is because people go with, you usually see like inflation for the essentials. So if you look at I wouldn't even consider auto insurance essentials, but they make you buy it. So it's almost like an essential thing, since you have to have auto insurance. And then rent, housing. You need rent and housing. You need a place to live. So those are all essentials. Restaurant meals, probably not, but people do order out. People do order food to their homes. So, right, there's probably, I would just say food is an essential, and then earnings, transportation, all that stuff. Now, if you look at it, earnings is inflated too, right? 4.1%. But typically that's if you get a new job. Like if you don't get a new job, you typically don't get that 4.1% increase. Typically on a yearly basis, you're probably going to get like a 2 to 3% increase unless your job does like some type of market adjustment where you're going to get, maybe like a 5 to 8% increase, but that's, you're not going to get that every year. But yeah, like I was saying at the bottom, why did those specific items go down? Why are they negative? Well, rental cars, toys, airfare, appliances, furniture, school books, used vehicles, home, hotel rooms, electronics, new vehicles, though all those things are not essentials, right? So if inflation's going up for the top half, education, medical care, recreation, rent, and stuff. If inflation's going up for those things, people are going to have less money to spend on things that are not essential, right? So you may not need you may not need a new vehicle, right? You may not need new electronics, or maybe you do need them, but you say, okay, the electronic that I have now is good enough and it'll do me good until inflation settles itself down and I can go purchase the newest iPhone or the newest Android or whatever you're into. And then and the reason why, so negative inflation, meaning the price of those things gone down, the people that sell those things are lowering the price because they know, okay, inflation's going up. We're not making any sales because people are allocating their dollars to what's most important, like rent, like food, like education. Education, you could probably debate that. That's why it's only 2.4%, but like medical care. You see medical care too. Medical care is one of those things too where you can really just send things to collection. Auto insurance, I think insurance in general is just a fraud type business model because they just get together and they try to overcharge people for insurance. So yeah, I think insurance companies are scammers, but hey, we need it, I guess. And the thing is too, when you get into like an accident, you try to call and they try to make it so much more difficult for you to get your benefits that you pay for. So again, I don't really like the insurance company, but yeah, that's a good chart. We'll see how inflation numbers look in April coming up. So we'll probably get that, beginning of May. But it says, but not all is gloom. There's actually some good news for shoppers in the latest inflation numbers, along with a reasonable chance that the resurgence of inflation won't last. The buried gem in the otherwise troubling March inflation numbers is that goods inflation has essentially disappeared. The inflation rate for commodities in March was just 0.6% year over year, and the goods inflation has been under 1% for 6 months in a row. Earnings are rising by 4.1% on an annualized basis, which means that in terms of goods, consumers are regaining purchasing power lost after COVID era supply chain disruptions. Now, again, when I talked about that 4.1% that they're talking about that they see right here for earnings, 4.1%. Again, everybody's not getting a 4.1% increase in their job every year. So I'm not sure if this number is skewed, but again, I don't even think the numbers we get are accurate. I think it's just tailored to what the the people running the show want you to see. I think, right? But I do think the auto insurance number is very accurate because I did get an increase in my auto insurance. Okay, so yeah, so they're basically saying 4.1 increase for earnings, but consumer goods are staying steady, 0.6% over year. So they're saying consumers are gaining purchasing power back, which I guess it's good. But it's not where they want it to be. And it says, and surging demand for stuck-at-home consumers sent goods prices soaring. Good inflation peaked at 14.2% in March of 2022. So they're talking about COVID, all right? Because people were sitting at home ordering stuff, Amazon, ordering food to the home because they didn't want to go out and catch COVID. So, it makes sense that goods inflated to 4.2%. The most nettlesome good inflations have been food, which is obviously a staple. Even that inflation is abating, which prices up just 1.2% year over year. In March, past price hikes are likely here to stay because labor costs for producing, processing, and transporting food have gone up. But again, paychecks are now growing more than cost. Okay. There's outright deflation in several areas since 2021. Yahoo Finance has tracked inflation in 28 categories that represent most things families spend on. All right, and I think that was the list we saw above. So if we look at that, good inflation disappears. Services inflation is the main cause of higher prices at this point. Right. So yeah, services right here. And I'm not sure that could make sense, right? If wages are going up, that means people are getting paid more to do services, right? So it just makes sense that services, are higher than goods as far as the main reason why inflation is up. Above average is now being driven entirely by the service sector, where inflation is still uncomfortably high at 5.3%. Even though anomalies are much of the fact of the story, one outlier is auto insurance, like we were talking about, up a mind-boggling 22.2% year over year. That reflects the high cost of cars during the pandemic, which means repairs now cost more. New cars also feature, right, so if inflation's going up, it means car parts are going up. So if you get into an accident and you call your insurance company, they have to pay more. But again, I don't really buy into that, right? Like, I think sometimes the insurance company can eat the cost. For instance, like, they're collecting money each month for you not even getting into an accident. So I'm paying that, whatever it is, that $250 or that $260 a month or that $900 every 6 months, and they're able to pocket this away. And I'm pretty sure they have a specific company or specific sector or line of business within their company to invest that money and make them way more money, right? So they're collecting money on a daily base, on a monthly basis, on a semi-annual basis. And the first time that they see prices go up for parts, they increase their auto insurance up, which I don't think is right. Maybe if you want to increase it a little bit, but again, they have a monopoly, so they're able to do these things. It says the other big driver of service inflation is rent, up 5.7% year over year. But the government's rent numbers are dated and don't fully reflect the cost of new leases, which have dropped since 2022. I could vouch for that. New leases for rent, like, I was expecting my rent to go up a lot higher. Like, it only went up like $200, which is not bad. It's still a lot, but it's not bad. Which have dropped. And I locked my lease in for another 15 months. So, yeah. It says Biden president has been counting on a sharp drop in inflation to boost voter attitudes. So remember, I was saying in the beginning that inflation, decrease in inflation is good for whoever's in office currently, because they want to cut those interest rates so the stock market can do good and you can get voters on your side. And basically that's what they're saying here. President Biden has been counting on a sharp drop in inflation to boost voters' attitudes and improve his re-election odds in November. He acknowledged that it's taking longer than he would like, saying in an April 10 statement, we have more to do to lower costs for hard workers, families. Relief is coming, however, whether it's on Biden's timetable or not. And I do think he does have some influence as far as what Jerome Powell does. Depending on who Jerome Powell votes for. I'm not sure. I don't follow that, so I'm not sure what side of the fence he's on. But, yeah, definitely if he is rolling with Biden, he will get those rate cuts most likely prior to when the election starts, right? Or, that September, October area. But for us to get rate cuts in May, June, or July, it's not looking too good right now, especially with inflation for March coming in at 3.5%. All right, that's pretty much it. Just wanted to talk about inflation. So what else? So like I was saying in the beginning, this is going to affect the stock market most because there's really like the stock market is vast, right? And there's really no supply limit when it comes to stocks. Maybe there is, but I mean, I guess up until you buy the whole company out. But like, there it's not like crypto where the supply is capped for most of those coins. And then also, each individual company needs to perform in order for that company to go up in price, for it to do good. Now, obviously, when interest rates get cut, companies are able to borrow more money and they're able to invest in their business and also, just produce more productivity, more revenue, increase in share price. But with crypto, you have a cut supply and it already has a value associated with it because of the limited supply. But then also now we have institutions coming into crypto with the spot Bitcoin ETFs. I do not think Ethereum will get their ETF in June. I'm almost like 90% sure, 95% sure they won't get it in June or May. I think the application for Grayscale or BlackRock is in May for the Ethereum spot ETF. But I don't think they're going to get it because they actually just came out with a lawsuit on Uniswap. Like Uniswap just got a Wells notice. So basically, a Wells notice is a notice from the SEC saying they're going to investigate your company because you violated securities laws. So I was reading to that today on Twitter, and which sucks for the DeFi space. And that's one space I'm very invested in when it comes to the crypto space. But I think it's just good. I think it's just going to cause a nice pullback for people that want to get in and get get DeFi projects at a good price, because it's definitely going to impact the DeFi space. But I just think we're too mature in the space for this to affect the crypto market. Because if you look at Coinbase, like they got a Wells notice as well. And I think they beat the SEC. I think they just recently beat the SEC. So I'm not sure why the SEC is just I mean, they came out with the thing with Ethereum. They're doing an investigation on Ethereum. So I guess they're just trying to make it like they're just trying to do all these things, send out these Wells notices. So that way they have reasons to not approve the spot ETF for Ethereum coming in May, and they could push it off a little bit. Because I honestly think it was going to be hard for them to not approve it because they just approved this Bitcoin spot ETF. So yeah, I think they just they had to come out with all these lawsuits and stuff to say, hey, we're investigating to make sure it's not a security. But think about it, if Coinbase just won their lawsuit, XRP just won their lawsuit, or recently won their lawsuit, I doubt the biggest DeFi project on Ethereum, Uniswap, is not going to win. So I think they're just doing it so they can buy some time. Because, like I said, if they didn't do anything, they would have approved. They would have had approved it without a game to speak. They would have had to approve it in May. And again, I just think there's too many bullish catalysts. Like I already think the crypto bull run is going to be massive this time around because of the the BTC spot ETFs getting approved. And then also just retail demand for it. The space is maturing. So I already knew that this bull run was going to be huge. So I think the SEC is just pumping the brakes on some of this by coming out with these lawsuits and sending out these Wells notices. But yeah, the fact that they're pushing interest rates back is definitely going to minimize the magnitude of the bull run. But I still think if you're positioned well, you'll make some good gains. But yeah, that's it for me today. That's what I wanted to talk about. Inflation numbers didn't come in too good, but we'll see how they come in for April and May. But yeah, take care. I'll see you guys in the next one.